Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan, and I'm the mind behind Make More Capital, and today we're going to recap Cresco Labs earnings, Vireo earnings, and the recent news of a deal in New York and a potential development around the 280E tax penalty. So before we jump in, if you enjoyed this video, please leave a like on it as it really helps out my channel. And then of course, if you want to learn how to take advantage of this generational investment opportunity, make sure you subscribe so that you don't miss any future videos and there's plenty of content to go back on. And for anyone who's worried about the day-to-day share prices, if you're a new investor getting in at these current prices, you are getting in at a steal. Let me tell you, I bought more Cresco yesterday just because I was happy to buy more shares in the $16 range, bringing my average price down to $17.85. And so yes, if you can look at the charts, you'd see, oh my God, I'm down $3,000. But I need to give every new investor a lesson in the difference between perception and reality, okay? So if you want to buy a house, you're not buying the house for the price that it's valued at. I mean, that's a big portion of it, but hopefully you're buying the house if you want to live in it, if you want to own it. You're buying it for the number of rooms, for the layout, for the property, for the land that comes with it, for all the benefits, the convenience, all of that. That's actually why you're buying the house. So think of buying a house similar to why you're investing in shares of a company. You're not investing in the share price. No, you're investing in the company. So it's similar to the house. You want to know why you're investing in it, who's running it, who's in charge of the operations, what competitive advantages do they have. Think of all that, okay? Now, so compare that house to a company. You're actually owning something of value. So obviously, the more you know what you're invested in and the better you understand that, the happier you are going to be to own it. Now, let's say your house that you bought is worth $400,000. And one day, some guy's walking down the street and he goes, hey man, I'll buy this house for $300,000. Flat out, I have the cash in the car. Are you immediately just going to sell your house for 25% discount just because some guy said, hey, it's worth, 25% less? No. So why are you doing the same with your stock shares? It's the exact same thing. Just because the market is telling you that this week the shares are worth a little bit less, the shares are worth a little bit less, the shares are worth a little bit less. That is the market saying, hey, the price is falling, the price is falling. But as long as you know what you're invested in, and we're going to go through Cresco's earnings right now, if you're confident knowing that you're invested in a good company, the day-to-day share fluctuation does not matter. If you invested that money in hopes that you're going to make a killing by March 26th, well then I'm sorry, but that is not a great approach to investing. So I just wanted to point that out. It's very important to understand the difference between what you actually own and what's happening on the ground versus the share price, because the share price does not matter. It changes every day, and that's more of the psychological aspect of it, but fundamentally you will have more success if you know what you're invested in, and you don't immediately just sell your house at a discount of 25% because someone says that it is and you just instantly believe them. It's the same idea. So Cresco Labs announces their fourth quarter and full year 2020 results. They're firming their position as the largest wholesaler of branded products in the industry in the U.S. with $274 million in wholesale revenue for the year. So full year 2020 revenue of $476.3 million, up 271% year over year. That's pretty phenomenal. And a record full year 2020 adjusted EBITDA of $116 million. With record fourth quarter revenue of $162.3 million. Now, this is a little bit lower than I was hopefully anticipating, but I was optimistic, and they did mention that their fourth quarter revenues would be flat just because they didn't have as much well, not that they would be flat, but they weren't expecting as much growth as they were from Q2 to Q3 because of lack of cultivation space to supply that demand. Mind you, their fourth quarter adjusted EBITDA was $50 million, so they're keeping a lot of that revenue and profit, which is great. And record fourth quarter retail revenue of $68.8 million from 19 stores, an average of $3.6 million per store, which when I listened to the conference call, they did say that is the number one, basically $3.6 million per store is the number one of all the LPs. That's what they did say on the conference call. So I just wanted to point that out. Let's just jump down to the numbers though, because if we look at Q3 and then Q4, and then this is Q4 of 2019. So we're looking at this year's Q4, this year's Q3, and then Q4 of 2019, and then this is Q4 of 2019 to Q4 of 2020, comparing the year over year. Now, these numbers are far more impressive, just the year over year. And again, this shows a little bit less growth than we were expecting, but I'll point out a few great things. So revenue did increase from end of September to end of December from $153 million up to $162 million. So just an increase of about $10 million. And it did their cost of sales did increase, and the production costs, mind you, if we look down here, it did not affect their gross profit, as that continuously, their gross profit pretty much increased as much as their revenue did, which is a really great sign, getting their gross profit margin up to about 60%. And compared to Q4 of 2019, 41 million to 162 million, that is phenomenal growth. So nothing to be disappointed about here. Cresco is establishing themselves as one of the top, as a dominant MSO, a dominant tier 1 as any of the other 3 are, yet they're valued at a much less valuation compared to the other ones, which is essentially why I started buying them in November in the first place when I did. Now, income from operations, they had positive 32 million last quarter, end of Q3. In this quarter, positive 21 million, so still positive. Mind you, they did just acquire Bluma in Florida. They acquired property, or they acquired dispensaries in Ohio and then in Massachusetts. So that is the cost of expanding. And as you can see here, they did have a positive net income at the end of Q3, and here we can see that they did have a negative 23 million. Again, though, it costs money to expand and to increase your footprint. So I just think if it's more fair to look at their year-over-year improvement. And we see it's quite large, 128 million up to 476 million. That is amazing, and that's putting them close to a run rate of 500,000 in revenue or sales per year. And so if we go back to the classic price to sales multiple, where companies that trade on the New York Stock Exchange or the NASDAQ, any other company in any other industry is usually fair valued at about a 20x price to sales. Then if they're bringing in 500 million revenue, then it's very safe to say that at a fair price to sales, we could see Cresco valued at $10 billion in the future. And that's just pointing out from their revenue growth alone. Mind you, 2021, I imagine that they're going to be able to increase this number at the same time. But overall, from 2019 to 2020, they did have a positive operating income, which means they're bringing in cash flow from operations, and they did decrease their net income loss from 65 million to 36 million as they are cutting costs. And ultimately, again, without the 280E tax, that's going to see them keeping more profits over time. And one thing to see is that they did reduce their SG&A costs as well. So it seems like they're doing a lot of cost cutting, and hopefully that is just going to reflect. And they're going to be releasing their Q1 numbers, which will cover sales from January, February, and March of 2021. That will come, if we're March, April, May, June, maybe June or July. And these numbers are just going to continue being strong. So on top of all the legislative change, as long as that can continue to slowly progress, and news of New York, which we're going to get to, there's still so many catalysts to come, and a lot of positives behind us, or a lot of positive momentum behind us. Now, I did just want to try to compare, because their Q2, which we don't see here from, their Q2, which would have ended sales September, go before that, June or May, was like 94 million up to 153. So I was expecting, I think every investor was hoping for a blowout quarter. And as we can see, that did not happen, but there's no reason to be concerned as to why you're invested in Cresco for the most part. And then in terms of adjusted EBITDA, what they did manage to pull in for this quarter and for year end, 50 million in adjusted EBITDA for the quarter and 116 in adjusted EBITDA for the year. And this is earnings before interest, tax, depreciation, and amortization. So that's a good profitability marker that you want to look for. And just the numbers are still very strong nonetheless, and I think it does show that their wholesale strategy, although it didn't necessarily set them apart this previous quarter because they wanted more cultivation space, and they felt that obviously that would help increase their sales, and that's why they've gone for they've made the acquisitions they have. It's still tremendous that the revenue did increase to 476 million, and I think just with the wholesale, though, bringing in 274 million in wholesale revenue is quite impressive. And so, on top of that, they closed, they did raise a bit more money in order to get them ready to uplist when they can. But their acquisition of Bluma, and what was it there? Verdant Creations in Ohio and Cultivate in Massachusetts will get them into those prime markets. Now, I did just want to cover a few things from the conference call that I listened to. So they did they did present that they had the largest growth among all Tier 1 MSOs, and they are the largest wholesaler in the U.S. with $271 million in revenue. That's very positive. And their $3.6 million per Sunnyside store was the top of all the LPs, apparently. And now they are in 7 $1 billion plus markets, getting into the largest markets what they wanted. And it seems like they have the top 3 market share in 3 of the largest markets. So I imagine, well, I don't know what that is offhand, so I'm not just going to try and bullshit you guys, but highest market share in bulk states. Their brand Cresco was the #1 cannabis brand in the U.S. Others prioritize stores. Cresco values the brand and wholesale model, and I think just their year-over-year growth has shown that that's really an approach worth considering, and it's great that they went full force on it, whereas the other MSOs ultimately went with as much of a large footprint as possible. Now, they also said they're wholesaling to 929 stores. So their brand Cresco is in 900, or not their brand Cresco alone, but their brands are in 929 stores in 9 states, and they are working on new brands this year. And then their promise, it says they took more market share in California. They reduced their SG&A costs from 46% in 2019 to 31% in 2020. And their 3 promises into 2021 are to execute in the best markets, which are the 3 that they recently just got into. So making sure that they get a dominant position and market share in these new billion-dollar markets, which are Massachusetts, Ohio, and Michigan. And then number 2 is be increasing their wholesale and extra capacity, automation, new brands, and that is their more cultivation space, more cannabis they can grow, more wholesale that they can deliver. And 3 is to refine their retail model, which is very successful and obviously doesn't cost them as much because they have fewer dispensaries that they own. Ultimately, that is very helpful though, because the more efficient they can make those, the more revenue they can ultimately keep in the long run. And so the deep dive did just and release this, I think it was yesterday or a few days ago, but Cresco Labs analysts raised targets following Massachusetts acquisition, and this is from Canada Accord, basically valuing Cresco now at, what was it? The 12-month price target of $22.22. And so as of right now, I mean, I haven't checked, but Cresco is sitting around $15.50 Canadian dollars. Hey, I bought more yesterday. Had I waited until today, I would have gotten a better deal, but I just don't care, because in the long run, I want to own Cresco for what the price is going to reflect in a year and 2 years from now. But just to point out, you can buy Cresco right now for less than its lowest price target by Roth Capital Partners at $17.50. So like getting in right now is just an absolute discount. And if you were to sell your shares right now because you're frustrated and you wanted things to go your way, it's a good lesson, and ultimately that's how you lose those. So be patient, folks. Trust. I've only done this once with the FRIA, but it was patience that eventually led me to see the returns over time, and the ultimate rewards of being patient. So, anyways, just wanted to point that out. Cresco again is the underlying business is doing phenomenally. So have no fear. Do not worry about the share price's day-to-day movement, because ultimately you're invested in the business, not the share price. Now, I did want to show Vireo as well, which is another MSO that I've increased my position in as well for the long run. Mind you, I'm seeing Vireo for myself as more of like a long hold over the next few years, because just to point out, their market cap is significantly lower than any Tier 1 MSOs. They're only worth $300 million right now at the price that they're trading at. And so their sales are a lot less, and it reflects that. Full year GAAP, the GAAP revenue of $49.2 million, which increased 64% compared to the full year 2019, which is a significant increase from a very small cap cannabis company. And their Q4 GAAP revenue increased 38% year over year and 46% excluding former Pennsylvania subsidiaries. So a few other things just to point out: their continued margin expansion reflects improved operating efficiencies across core markets, and this is what I was watching for them to hopefully sort out and just improve costs in these earnings. So we'll go through those in a moment. And it appears that they have incremental expansion projects in Arizona and Maryland scheduled to begin in the second quarter, so they can provide more capacity as well, and keep providing cannabis so that there's so that they can supply that demand with ease. And then potential reform in companies' regulatory jurisdictions could accelerate the revenue growth. So if we just look at the numbers, we can see from 2019, end of December, from 9 million up to 12.4. Not a lot of growth. We're not expecting a whole lot of growth yet from Vireo, but better to compare year over year. Total sales in 2019 was 30 million. Total sales or revenue in 2020 was 49.2 million. But I think most of the gap here is because they've cut costs efficiently, and we'll go through that as we look through the numbers. But so their gross profit did increase from 1.3 million to 5.3 million, which is quite a nice increase, but again, such small numbers, so that's why the increase is 303%. Still phenomenal, but from again 1 year to the next, 7.3 million to 17.1 million. And this is, I think, from reducing costs very effectively. Now, some of their highlights, though, let's see what they're actually doing on the ground. So during the year, the company completed the expansion of its green goods retail stores in the state of Minnesota. All 8 of Vireo's dispensary licenses in the state of Minnesota are now operational. Now, I don't know many other companies that are fighting for market share in Minnesota. So it seems like Vireo does have Vireo does have the largest footprint there. And so in a sense that it's one of those states in the middle where population is not as great and they've been slow to change the laws. Vireo will definitely benefit from the expansion and the greater acceptance of cannabis in Minnesota in itself, but then they do also have key footprints in New York, Arizona, Maryland, Ohio, all states that are likely going to legalize for recreational use in the next few years, New Mexico too. The company opened 4 new green goods dispensaries in full fiscal year 2020, and it ended the year with 15 operational dispensaries nationwide, increasing their footprint. And during the year, the company divested its former subsidiaries in the state of Pennsylvania for $26 million, including $21 million in cash, and the company utilized a portion of these proceeds to invest in more attractive opportunities in these Arizona and Maryland markets. So again, markets that are looking to expand in the next few years. And they have about $25.5 million in cash on their balance sheet. So one thing that I do like about them that I wanted to point out was that they have very, very little debt. So where is it down here? Sorry. So their current assets were $47 million, including cash on hand of $25 million, excluding the expected proceeds of the first tranche of, it seems like they are soon going to be taking on about $23 million in debt. Not a whole lot, but that is news from up here, that they are taking on a little bit more debt. Mind you, as of right now, their total current liabilities were $19.9 million. That's it, with $1.1 million in debt due in the next 12 months. So I figure if Vireo, they're likely a good candidate to be bought out because they have very little debt, which makes them attractive in the long run. Not like any company that would have to buy them would have to spend a lot of money to ensure that, they reduce their costs. So that's something very attractive for Vireo in a sense. So mind you, the fact that they're taking on a bit more debt now, let's just go through the reason for it. It will be utilized to support the company's ongoing growth initiatives and working capital requirements, which makes sense. So their outlook commentary, given the near-term uncertainties, they're not providing any guidance for 2021, which makes sense. But they anticipate growth investments made in the fiscal year 2020 and continued execution of its core market strategy will yield organic revenue growth for the foreseeable future. Now, stronger revenue growth coupled with expectations for reduced costs as a percentage of sales should substantially reduce cash outflows from existing operations through 2021. Recent efforts to scale production and expand the company's retail dispensary footprint could also help derive improved financial performance through 2022. Main thing, though, is there's potential for several favorable market regulatory developments across Vireo's state-based operating footprint in the near term. This is where they're most attractive. Following the recent enactment of the adult use programs in Arizona, Vireo's markets in Maryland, New Mexico, and New York could all potentially enact adult use legislation this year, and Minnesota could begin to allow the sale of raw cannabis flower within its medical program. Each of these outcomes could serve as a significant revenue growth catalyst for Vireo's business. So I'm willing to invest in the long run for them to wait for them to capitalize on this. And the company expects to open 2 additional retail dispensaries in New Mexico during the second quarter of 2021. And they're going to continue their ongoing initiative to rebrand its retail stores in New York to its green goods store concept. So they are working on expanding and increasing where their revenues are going to be coming in. But if we look year over year, their entire balance sheet, they did manage to increase their cash position from 7.6 to 25.5 million, which is very, it's heading in the right direction ideally. And again, just very little long-term debt here, which is impressive to see, and they have very little liabilities compared to their total current assets. So their current ratio is healthy. If we look at the quarter over quarter, they did manage, well, it's still pretty significant costs from just 1 year to this. Okay, sorry. So this is December 2019 to December 2020. Total revenue increased from 29 to 49, but still a significant loss from operations. Mind you, compared to Canadian LPs, it's a lot less. And it seems like whatever amount of debt that they're taking on right now is about 23 million. Not sure if it's to cover this or reduced loss before, or where is it? Where reduce? And then so revenue comparing end of Q4 last year to Q4 this year, they did increase from 29.9 to 49 million, which is, again, for a small cap company, a very significant increase in the total year. So if we look at that price to sales metric again, if their revenue is 50 million and they're trading at a price to sales of 20x, then that would, put them at $1 billion in valuation right now, fair value based on their future potential, if they were treated like any other industry and not a cannabis company kind of thing. Now, again, that's obviously a long shot, but that does obviously provide some significant upside if they can cut costs and they can increase their revenue and their gross profit over time. Now, as we can see, though, their loss from operations, they're still spending a bit of money. Mind you, 22 million compared to the hundreds of millions Canadian LPs are losing is not it's not a significant thing to be worried about. And then if we look for the last 3 months, from Q4 of 2019 alone to Q4 of 2020, again, very little growth, but fundamentally they cut their operating costs, which is very important. And then where is their net loss was reduced significantly from 39 million in 2019 to just 2.2 million in 2020. So long term, if some of their adult use some of their markets can legalize for adult use this year, that's why I want to be in Vireo early, and I want to be holding long term, because I think because of the population in the US and the diversity of the market, there's going to be a lot of opportunity for a lot of successful cannabis companies to come. And Vireo is a very medical focused one, with a doctor as the CEO as well. So I think that's just going to help them with credibility, with intellectual property, but then also, once New York opens up, once those states open, they can do adult use as well. Now, net loss, just to point out, from last year to this year, they did decrease from 57 million to 22 million, so at least they're reducing the amount of money that they're spending to operate. Again, from 26 down to 10, so at least everything is going in the right direction. And it seems like they have enough assets to cover liabilities. So for 2021, they should just be able to increase their revenues. And then, cash at the end of last year versus this year. So that is, and then, so if we want to actually dig into the net income, that's where it was, what I was looking for. So net income down here, we have from 2019 to 2020, they've reduced from 39 million to 2 million. And after all of that, they did manage a very, very slim adjusted EBITDA in this quarter of 112,000, down from 7.2 million in 2019. And then from year end Q4 2019 to this current past Q4 2020, reducing their negative 16.8 adjusted EBITDA to negative 5.2. So they did have a profitable adjusted EBITDA for this quarter. Mind you, they're still a small company doing their thing in their select market. But again, I'm invested in Vireo more for the long-term end of 2022 potential growth there. Because as a $300 million market cap, if they can bump up to 1.5 billion or 2 billion, then I will see a significant return on my investment getting in when they're only valued at 300 million. So that is it for Vireo. I hope that was not too confusing and a clear enough walkthrough for you. And just before we end off, there has been news of a deal yesterday. We do not have the details. There's no signatures yet. No, sorry, that's not true. Not that we do not have the details. Some of the details are right here. We do not have all the details, but basically this news is saying that there was a deal. They are going to fast-track legalization, but they still have until April 1st, so we could see next week. It might take until next week for the signatures and for the bill actually to get signed. But New York apparently is ready to legalize recreational cannabis. The state would impose special taxes and prepare to license dispensaries under an agreement reached by Governor Andrew Cuomo and legislative leaders. The deal that legislative leaders brokered with Cuomo would legalize cannabis use for adults 21 years old and up, and includes a 13% sales tax, 9% of which would go to the state and 4% of the localities, Kruger said. Distributors additionally would collect an excise tax of as much as 3 cents per milligram of THC, the active ingredient on cannabis, with the sliding scale based on the type of product and its potency. Very, very slim technicalities. Mind you, I just wanted to show you that this is the headline not only in Bloomberg, but in the Wall Street Journal. This is big. So hopefully this awareness will be very helpful, and then sooner than later we'll have this deal done in writing, signed and done. And maybe that will be the trend reversal again. I don't know. I don't try to predict what the market is going to do because I don't care. I know that I want to have my investments, and for the long run, I have enough cash in my checking account so that I can take care of myself for the next year. And then worst comes to worst, I have all those Vireo shares that could last me all the way through 2021. So it's also just important to know that and make sure that you are prepared to wait as long as you need to, especially if you're an investor, not a day trader trying to time, because time in the market always beats trying to time the market. And lastly, there was this article published yesterday. Congressional researchers analyzed the 280E cannabis tax penalty and legislative solutions. So all this basically says is that some people are looking into the 280E and how they can go about resolving it. But this is the first of its kind, any publication that people are actually looking into this. Outside of the fact that 280E, apparently that language had been removed from the recent Safe Banking Act. So in a new report published this month, congressional researchers examined tax policies and restrictions for the cannabis industry and how those could change if any number of federal reform bills are enacted. And so basically, recent legislative proposals aim to relax federal restrictions on cannabis or to mitigate the disparity between federal and state cannabis regulation. The new CRS report states, many of these proposals would alter the tax treatment of cannabis businesses by rescheduling or descheduling cannabis under the CSA or by making cannabis-specific exemptions. And under these proposals, Section 280E would no longer prohibit cannabis businesses from taking deductions and credits. So this doesn't really say anything concrete, but more just showing us that people are looking into the 280E thing. So as investors, that's what we want to see, especially coming after news that it's been removed from the safe banking. So hang tight, folks. I hope this has been a good update. Please let me know in the discussions what you think about my little analogy about investing in real estate versus the market, because I think that's a very fair representation of how the price really doesn't matter as long as you know what you're investing in, because you're not investing in a share or stock, you're investing in a real business, right, at the end of the day. Let me know what you think about Cresco or Vireo's earnings in the comments below. I'd love to start a discussion. And this news of New York is great. Hopefully next week we'll reverse that trend, but ultimately just make sure you're in a good position enough to wait. Otherwise, investing can get stressful, and you just don't want to have to put yourself in a position where you're going to sell for loss. So best case scenario, if you have your good positions, and regardless of how long you have to wait, try to make more money on the side. What can you do to increase your income just so that you don't have to sell that investment, kind of thing? All these little factors, plus the experience and self-discipline and control that you gain over time will help make you a more patient and calm investor in the long run. But thank you, everyone. I hope you enjoyed this. Please leave a thumbs up if you enjoyed it, and subscribe so that you don't miss any future videos, and I will catch you on Sunday for This Week in Cannabis. Have a great day, everybody.